Hi, everybody. This is Mike Banner, and welcome to the 5th episode of 62 Who Knew here on WeBeam TV. I'm sorry, did I say 6th? It's the 5th episode. A couple of my friends have said to me, and a couple of our call-in people, how often are you going to say, or how long are you going to say what number episode it is? And I'm really not sure, but it feels good to say. In the first 4 episodes, we had a total of more than 11,000 viewers, and we're very proud of that, and I want to thank everybody for that. Today's show is going to feature Mr. Mark Goldberg. Mr. Goldberg was a guest of ours on our first show, and if you remember, or if we have a lot of new viewers out there, our topic of conversation was long-term care insurance, a topic that really touches everyone's lives here in the United States. It doesn't make a difference if you're in your 40s, your 50s, or in that 55 to 65 realm, which is what 62 Who Knew is all about. If you are, in fact, planning on living to be in your upper 80s and 90s and even more, and I hope all of you are planning on that, you should have some form of long-term care insurance. Today, we are going to dedicate the entire show to long-term care insurance. So we're going to get right to it. We have a call-ins today. Phone number should be posted on the screen. I'm having a little technical difficulty right now. I'm not seeing the screen. Okay. Is the call-in on the screen, John? All right, cool. Thank you. So there's our call-in number, and I'd like to bring on Mark right now if we can.
Hello, Michael. How are you, Michael?
Mark. Hello, how are you?
Good. You look very Cronkite-ish tonight.
I went for the black tie. Did you like that?
Yep. And now you know the rest of the story. That and now all the news that's whatever Mr. Cronkite would say. You look like, just like him today.
And now all the news that you need to hear. Yes, all the news that Mike Banner and Mark Goldberg want you to hear for the next 56 minutes. Well, thank you for coming back, really and truly. Long-term care insurance to me, as I've said a few times, I just turned 60, and I'm probably one of those people that is kicking themselves for not buying it in my 40s and 50s. I have personally seen through my family and friends how many people regret not having long-term care insurance. And through the medium that we met, through our mutual friend Peter Gelbwax, as I do speaking throughout the country about reverse mortgages, I can't say, I have to use the words, the horror stories that I hear of people and the care, the level of care they're getting, or should I say the level of care they're not getting because they didn't buy this protection is, it's terrible. It just is. So if you would give us a brief, as you did 4 weeks ago today, just a brief history of long-term care and why you feel it's so misunderstood.
And very astute of you to point that out, because by far the greatest risk we face once we get to 62 Who Knew is the cost of long-term care. The risk of that happening is far greater than all the other things we already insure against, like homeowners, house burning down, or getting into an automobile accident, or even needing your health insurance for any substantial major claim. All of those risks are far less likely than eventually needing some form of long-term care, whether it be at home or in an assisted living facility or an adult daycare center or at a nursing home. So the history of long-term care been around since the 70s. Maybe some will argue as early as 1968, but at that time it was strictly nursing home insurance, and in order to get it, the triggers were very close to the same as Medicare. You had to go into the hospital first. The policies evolved. It wasn't until the late 80s, early 90s that they started to become more flexible in what they covered. In the mid 90s, they started to include things like assisted living and home health care and adult daycare. And they've evolved ever since to include the kind of benefits that people are looking for at the time when they need care. And so the plans that are out there today are much, much, much different, much more comprehensive than the ones that were originally offered.
Yeah, one of the first things you always hear from someone is only the rich can afford long-term care insurance. And I've learned from you and professionals like yourself, that's far from the truth.
Far from it. And again, I don't want anyone to misunderstand. The purpose of the insurance is to protect assets. So you do have to have some savings slash, equity in your home slash assets that you've accumulated for it to make sense. But at the same time, certainly you don't have to be a multimillionaire or anything. About 20% of my clients fall into the millionaire category, but the rest are upper middle class, average income somewhere between, or average savings somewhere between $500,000, 750,000, something like that.
Hosting an internet TV show, just trying to get by.
Yeah, well, there you go.
Well, like my passion, which is reverse mortgages, which brought me to 62 Who Knew, for a plethora of other things besides reverse mortgages. Again, the misconception of the average American of what long-term care insurance is, of the ability to just state, again, I'm going to pay those premiums for all those years. Why should I have it? I hate to use the word ignorance/stupidity in that comment. You hope never to use it, but it's got to be there to protect you, your family, and your assets, as you said.
Yeah, and again, you just touched on a point that is a very big misconception. People think of long-term care insurance as nursing home insurance, and in reality, it's just the opposite. It's nursing home avoidance insurance. When you have a private pay policy, you're considered a private pay patient when you have a policy that can pay your expenses if you need long-term care. You're going to be much more in control of where you get your care, how you get your care, how often you get your care, etc. And so many, many times I've seen it where a policy will allow a person to stay out of the nursing home, especially if they have any kind of support system around them.
Which most people do, let's face it. I shouldn't say most people. I think in our families, they do. But again, nursing...
They have that, yes, but...
I'm sorry, go ahead.
No, I wasn't trying to step on what you were saying. I'm just saying that most people have some sort of support system, whether it be a spouse or it could be family members, it could be the next door neighbor, et cetera. That it's much more likely you can stay at home if you have a support system. If you're by yourself, if you're a widow or a widower, and more likely then you're going to need to go get care. But again, that doesn't mean a nursing home.
That's
Today,
correct.
the biggest part of the marketplace is the growth of assisted living facilities,
which are beautiful.
Yeah, it's like being on a cruise ship.
Yeah, I
you still
absolutely
live independently, but you take your meals in a common dining hall. But other than that, you've got your own place.
Absolutely.
It's like going to camp.
We have our first call, so let's remember where we were, because I still have a lot of personal questions about long-term care. But our first caller is Lily. How are you, Lily? Lily, are you there?
Lily?
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 Hello, Lily.
Lily?
All right.
What happened to Lily?
Lily, are you there? To our audience, I promise we're not making Lily up. I absolutely promise. She's there. We're just having problems hearing her. Well,
right,
my
well,
producer can hear her. John, can you ask her question? And I will repeat it to Mark, because on 62 Who Knew, we don't give up. We're getting Lily.
Okay.
Hi, Lily. Still no Lily.
Hello, Lily.
Hello,
We lost
Lily.
Hello, Lily. Hello.
Isn't that Hello, Dolly?
No, it's Hello, Dolly. I have a granddaughter, a niece named Dahlia. I sing her the Hello, Dolly song all the time. Hello, Dahlia, though.
Hello, Dahlia.
Yeah.
Louis Armstrong sang that in
once.
Syria, I think. I'm not sure.
I met the Dalai Lama once, and I didn't hold back. I actually went up to him and said, "Hello, Dolly."
You didn't, did you?
I did. He was standing right next to Richard. Richard Gere at the time. Richard Gere said the same thing. He said,
Hello,
"No,
Dolly."
you did." Hello, Dolly.
Did he laugh?
Yeah, he did. He smiled.
He
I
smiled.
think he heard it more than a few times.
Probably.
Yeah.
Our producer is
Lily,
working feverishly for us to hear Lily.
you're going to ask the question. Why don't you ask a question while we're waiting for Lily? Oh, the question's coming in. I hear it.
All right. So Lily wants to know exactly what does home care coverage cover?
Hello.
Oh, Lily,
there
we
she
hear
is.
you.
Hello, Lily.
Hi. The question that I have is, does long-term care cover coverage at home, and how does it help?
Well, Lily, you couldn't have asked a better question because we were just talking about that. In that long-term care insurance today really will help you stay home and stay in control of how you get care. So that's an ideal question. And most of the time, it's to the carrier's advantage to keep you at home. And so they build special benefits and perks into the policy to encourage that to happen. And what I mean by that is they'll, for example, allow you to take usually about 2 months worth of your benefits in a lump sum in order to modify your home so that you can stay at home. Put in ramps, put in bars, things like that, so that you can stay at home a lot longer. Do you have, you're asking about staying home specifically for yourself, Lily, or for someone in your family?
No, it's for my mother.
Uh-huh.
She lives with me.
She lives with you. Okay, so what will happen is at the time of claim, the carrier will send in a care coordinator at their expense. It won't cost you any money out of the policy. At their expense, it'll be built into the policy. They'll pay for it, and that person will help you put together the best plan of care possible. And you don't have to accept it. You always have the option to say you want to go a different direction, but you'll at least have input to all the things that are available to you that you might not know of. And as time goes on, things will rapidly change. Right now, a big area in the home care area is robotics. People are going to be able to have a robot that comes into their home and provides them with the help and assistance they need with cooking, with activities of daily life like bathing, dressing, those kinds of things. And so you'll be able to know what's accessible to you, and then you'll be able to take advantage of that if you want to stay home as long as possible. So the policy will help pay for that. They'll pay for the actual modification of the house, and they'll actually pay to train a caregiver. So let's say you want to get care from your mother needs care from yourself, or if you're bringing in a next door neighbor for her or something like that, they will pay to train that person in whatever skills they need in order to take care of you. Okay, so in this case,
it would be me. They would train me?
They would train you. So if your mother needed some kind of routine, for physical therapy or something else that she needed shots on a regular basis, or if she needed whatever she needed, they would train you to be able to administer her care, and they would pay for that training.
Wonderful. Well, thank you so much.
Thank you, Lily. I'm sorry we had trouble getting you on, but it was well worth the wait. Thank you.
Thank you for taking the initiative to call in.
Thank you.
Mark, I find myself, sitting here listening to you talk, and I have to remember that I'm on camera so my mouth doesn't open. I had no idea that part of these policies was a lump sum to take care of, remodeling the house and making it safer and training the caregiver.
Right, and that most people don't, but that's, again, it's to the carrier's advantage for you to stay home because it most likely will cost them less money if they can keep you home. So they'd much rather put the money out up front to keep you at home because in the long run, they'll save money.
We're getting close to a break. Two things I want to talk about when we come back is robotics and how much extra the premium is if I'd like to have a very good-looking blonde robot. We'll talk about that when we come back.
for you.
Hi, my name is Mike Banner, and in addition to being the host of the 62 Who Knew television show, I am also the president of Professional Mortgage Alliance, where our passion is helping seniors entering retirement purchase their dream retirement home without the obligation of a monthly principal and interest payment. Please call me at 727-224-3859 or visit my website at professionalmortgagealliance.com.
My name is Ann Rogers, and I'm a real estate agent and broker in Pinellas County and have been for over 24 years. Ann Rogers Relocation Resources provides a full array of services to help you or your loved one transition gracefully to a new residence or adult living community. Our first consultation is free and with no obligation. Please visit our website or call to talk to me directly.
Hi, my name is Lisa Marie Kennedy, your real estate expert here in the Sarasota, Lakewood Ranch, Bradenton area. I've spent years developing myself, studying the industry so I can serve you and communicate with you the best way possible in your real estate transaction. My phone number is 941-807-2054, or please visit my website at lisamariekennedy.com.
Welcome back to 62 Who Knew here on WeBeam TV. Tonight our guest, again, is Mr. Mark Goldberg, a very well-known and respected national long-term care insurance expert. I started to say before, we'll skip the robot topic for a second, I find myself during that last call, being one of your viewers of the show, just going, really? There is a policy, is this a rider that's going to allow them to get a lump sum to do a little remodeling in the house to make it safe for mom and dad, and then to train a caregiver, which is usually a son, a daughter, a I never knew that existed.
Yeah, no, it's built into the policy. And it's part of the standard issue when you get one. There are things sometimes you can do to enhance the home health care benefits, but the care coordination benefit and the modification to the home are a standard part of every policy.
That's incredible. It truly is. Now, let's get back, all fooling around aside, to that robotic comment for a second. How far away are we from that? I've never heard anybody mention that.
Well, it's in testing stages right now. My guess is 2025, it'll start to become pretty a normal thing. By 2030, really? I think it'll be well integrated into our healthcare system. But it's beyond just the robotics. It's also, today, they've got a pill you can take with a camera. It's built, a tiny little camera is built into it. And you swallow the pill and it goes through your system. It can pre-diagnose any kind of illness that's that's starting to form, whether it be cancer cells or, clotting of the arteries or whatever that might be. And it can target that specific area and get rid of that before it becomes a problem. That's another big breakthrough. I'm absolutely convinced that the treating of Alzheimer's, dementia, cognitive impairments will become a chronic illness in the next 10 years, just like diabetes is today. So you'll take a pill and it'll stop the plaque from spreading in your brain, and you'll be able to manage it like you do diabetes or something else. So.
You are convinced that that is in our near future?
Yes, there's just so much stuff going on. In fact, again, you mentioned Peter Gelbach earlier. He's a big supporter of the Weitzman, both of ours. Yeah, he's a big supporter of the Weitzman Institute, and they're on the cutting edge. That's a group out of Israel that's on the cutting edge of getting to the Alzheimer's breakthroughs to identify the gene that causes it, or at least again be able to stop the progression of it. Just like we did with AIDS in the 80s and 90s, and today, how many people do we know still alive because they got their training, the care for HIV, and they've turned it into a chronic illness? Yeah. So again, that's what will happen with dementia. But I can promise you that as quickly as we solve these illnesses and challenges, new ones will come along.
That's the way it is.
And that's the way it is. As we live longer, there'll be new challenges. Everybody wants to live long, but the problem with living long is the longer you live, the more likely something's going to happen to you.
The longer you live also, the more likely you're going to run out of money. Cold, hard truth that nobody wants to talk to.
That's exactly right.
Who knew?
Who knew? 62.
Yeah. Oh, we have another phone call. Hello, Dennis.
Okay.
Oh, hold on. Hello, Dennis. How are you?
Hi, can you hear me?
Yes, I can. Very well. Thank you for calling. What's your question for Mark?
Yeah, so I'm in my mid-50s, and kind of seeing what's happened with my family, and I know, some of my family members have had a traditional long-term care policy, and that's certainly something that I was considering. But in doing my research, I know that there are some new types of policies that are out there. They're called hybrids. I guess I'm kind of struggling to decide whether or not should I just go with the old tried and true, and kind of what's the upside of looking at maybe a hybrid policy. I kind of like some of the things that I hear, but my concern is they're kind of new in the game, and maybe I should go with what's tried and true.
Dennis, that is an excellent question. I'm glad you did your homework. I wish more of my clients would.
Yes.
Yes, I could hear the question. Can you hear me, Dennis?
Dennis, I don't know if you can hear Mark, but we did hear the question, and it's a great question.
Okay, great.
Okay, so Dennis, I was applauding you for doing your research. Yes, the fastest growing category in the long-term care space is the hybrids, the introduction of the hybrids. They've been around for about 20 years in one form or another, but they've really taken off in the last few years. And in fact, last year, for the first time, the actual lives of the sale of hybrid policies surpassed that of traditional long-term care. So they're growing in popularity. Why? Well, for the reasons you stated. A hybrid policy is usually a hybrid, meaning it's a combination policy with either a life insurance policy with a built-in long-term care rider or an annuity product with a long-term care rider. And the beauty of those programs are that it takes the risk off the table of what happens if you get a policy and you don't need the coverage. Because one way or another, someone's going to get paid. Either you're going to get paid in many multiples of your money for long-term care, or your spouse is going to get paid, or your beneficiaries are going to get paid if you pass away and never needed long-term care. So one way or another, someone's getting money, and one way or another, you're coming out with more money than you ever put into the plan. The upside of traditional coverage is that, like most everything else, when it comes to insurance in our lives in America, we lease our insurance products. We pay an annual premium to our homeowner's policy, or we pay an annual premium for our auto policy or a monthly premium. We don't want to have a car accident, we don't want to have a fire in the house, but if we don't at the end of the year, the insurance company doesn't say, okay, you didn't have those things, here's your money back. They go, okay, here's your premium for the next year. So you've leased that policy for that year and you're paying a new premium every year. That's good from a cash flow standpoint in the sense that you're not putting up one big lump sum of money for a hybrid policy, if you will. But the downside, again, of that is twofold. One, if you don't use it, you lose it. And two, because you have to pay it annually, technically you can be subject to a rate increase. Now, there's a lot of press out there about rate increases when it comes to long-term care. However, again, unlike your auto insurance or your homeowner's insurance where your premium can go up if you make a claim, that can't happen with a long-term care policy. The only way a carrier can raise rates on a long-term care policy is if they go to the Department of Insurance in your state and ask for a rate increase on everyone in your age category at one time. So it'll never go up because you make a claim. It'll never go up because you get sick. It'll never go up because you get older. It'll only go up if they say all 55-year-old men in the state of Florida are subject to a rate increase. But technically it could still happen. Where with a hybrid product, you're contracting up front for a benefit. And you know what that is, and there is no premium. You're just reallocating assets. You're taking rainy day money that you have in a passbook savings account or a money market fund or a CD, and you're moving it over into an account with the insurance company. It's your money. It stays your money. It's in your name, and it never stops being your money. If you want your money back, you say, give me my money back, and you get your money back. If you end up passing away and never needing care, in many cases, you can get a death benefit equal to 2 times the amount of money you put in. So if you put $100,000 into the account, again, it's not a premium, you just reallocated the $100,000. Now your beneficiary is going to get $200,000 when you pass away. But if you need long-term care, you're going to get sometimes as much as 4, maybe even 5 times that amount of money for long-term care. And again, in some of the policies that I represent, you'll be able to also still have a death benefit that will help cover final expenses on top of that money. So you put $100,000 in, you might have $400,000 or $500,000 to use for long-term care, and your beneficiaries will get a death benefit, a small one, but a death benefit that will help at least cover final expense costs. So it's a very efficient way to approach this risk. But the vast majority of people still go the traditional route because they don't have a lump sum of money to just move from one account to another. So again, both sides have their pros and cons, like anything else. And when I meet with someone, at least we determine through questions and research about their backgrounds and what they're looking to achieve, exactly what strategy would be best for them.
Did that answer your question?
Dennis, are you there?
His phone's breaking up, but it did answer his question. Thank you, Dennis, for that question. And Mark, thanks for that answer. Again, I find myself sitting here going, because I'm personally learning so much. You just described something, and well, I'm being remiss in something. To all our listeners, we have as a news show, there's no reason, I think this is very normal on a news show. We have a certain amount of listeners live. That's a small number, but we're developing thousands of listeners throughout the week on WeBeam TV, repeats on YouTube, on Facebook. We only have a few seconds till our next break, but to all of those listeners, go to Mark's website that is on the screen right now if you have questions. Ask questions that will protect yourself, your mom, your dad, your grandmother, your grandfather. Ask those questions. If you don't have that, go to the 62 Who Knew website. We're going to talk about that website at the end of the show. Ask your question there. I'll get it right to Mark. We're going to go take a quick break and come back, I hope, and take more calls and learn more about long-term care insurance. Hi, my name is Mike Banner, and in addition to being the host of the 62 Who Knew television show, I am also the president of Professional Mortgage Alliance, where our passion is helping seniors entering retirement purchase their dream retirement home without the obligation of a monthly principal and interest payment. Please call me at 727-224-3859 or visit my website at professionalmortgagealliance.com.
My name is Ann Rogers, and I'm a real estate agent and broker in Pinellas County and have been for over 24 years. Ann Rogers Relocation Resources provides a full array of services to help you or your loved one transition gracefully to a new residence or adult living community. Our first consultation is free and with no obligation. Please visit our website or call to talk to me directly.
Hi, my name is Lisa Marie Kennedy, your real estate expert here in the Sarasota, Lakewood Ranch, Bradenton area. I spent years developing myself, studying the industry so I can serve you and communicate with you the best way possible in your real estate transaction. My phone number is 941-807-2054, or please visit my website at lisamariekennedy.com.
Welcome back. Thank you. We just had a great call, and again, as well as our audience and our caller, I continue to learn more and more about what we're talking about. I started to say before, we're going to have, and we're so happy about that, several thousand people watch this show over the next 7 days through repeats, through webeamtv.com, various social media. You're going to see this. Please go to Mark's website, which is www.fpsinsurance.com. Ask your questions. I'm not saying this just because he's a guest. He's one of our best experts in the country over this. And Mark, were you going to say something?
Yeah, when they go to the website, they'll see a link as soon as they come on that says that requests a free booklet on everything you need to know about long-term care. So if you're thinking about this for yourself, whether it's through us or not, it doesn't matter. Get a hold of that booklet and get yourself educated. That last caller had taken the time to educate himself, and he knew about the hybrid option. So many people don't know that. So again, it doesn't cost anything. We'll be glad to send it to you right through the computer. Just request the free booklet, The Essential Guide to Long-Term Care. It's available to anyone that goes to the website and just makes a request to get it, and hopefully you can put it on your website too.
Oh, we definitely will. We're going to make some big changes in the 62 Who Knew website in the next week to 10 days. We truthfully didn't expect 11,000 views of this show in its first 30 days, so we have a lot of growing to do as well. The hybrid product.
If you would allow me real quick, Mike, I was watching your commercials while we were waiting to come back. Mm-hmm. You know, one of the ways, there's lots of ways to solve this risk of long-term care. It doesn't have to be traditional insurance. Yes, that has been the majority of way that most people have, but there's lots of different ways. And one of them frankly, is where I look to you, because the reverse mortgage has become a very valuable tool to someone who wants to stay at home, who can use the equity in their home so they can stay there by being able to fund long-term care, especially as they get older and their health starts to fail and they're no longer eligible for traditional long-term care or even the hybrid long-term care. You have to health qualify for almost all these products. You don't have to health qualify for a reverse mortgage.
No, you just have to financially qualify, but it's pretty easy. And I thank you for bringing that up. As I've said in the last 30 days of shows, I wanted to make sure and separate 62 Who Knew from my reverse mortgage career for a while, because I really want 62 Who Knew to cover that spectrum of long-term care insurance, life insurance, annuity, final expense insurance, Social Security, reverse mortgages, but I want reverse mortgages to be one part of it. But thank you for bringing that up, because I think
it's okay to be modest, but you're one of the icons in the reverse mortgage business, and people need to know that. I find people want to do business with people that have more knowledge than they do about the particular product or topic that they're looking to address, and they should know that you're a tremendous resource for that product.
Well, I appreciate that, and in August there will be a show on reverse mortgages, and I do appreciate that. The one thing I'm going to throw out that I have always found amazing is that most people right now, our parents, they had their mortgage burning parties. Their goal was to retire with a free and clear house. Well, for so many reasons that we're not going to get into today, because I don't want to take the limelight away from long-term care insurance, many, many millions of seniors are retiring and they still have that mortgage. And the truth of the matter is, you may not use the reverse mortgage to directly buy long-term care insurance. That may not be their purpose. But if we eliminated their mortgage payment, wouldn't that make it easier to buy protection from an insurance professional like you? And why millions of seniors are not doing that is still beyond me. But again, we're going to have a show on reverse mortgages. Thank you for the endorsement. I appreciate it. But today we're sticking with long-term care insurance. I do appreciate it, though. Back to this hybrid product. You mentioned a life insurance with a long-term care side to the hybrid and or an annuity part of it. I'm not going to ask you for rates, because I know rates are subject to so many different changes, like in my industry. But if somebody did have a couple of $100,000, $100,000, $200,000 sitting in a CD somewhere or in a standard annuity, traditional annuity, and they relocated that money, repositioned that money into a hybrid product, is the rate of return competitive with a traditional tool? Better, worse? What would you think?
In the ballpark. I mean, the products I'm right now, and it vacillates or fluctuates with the interest rates. But right now, the average product on the hybrid side, when the money sits in the account, is earning about 2.5% interest. So it's probably better than what they're getting in their passbook savings account, but not as much as they might be getting in some of the other. But it's in the same ballpark. It's not a place to park money that you're making earnings off of from the market,
right?
At least now while the market's going up. But again, that isn't its intention. This is money that you're using to protect what you've already earned and grew. Not to you're not looking to use this money to necessarily earn you additional money in great numbers. This is definitely a defensive strategy. But again, keep in mind though, if you're getting 4 or 5 times your money for the purposes of use of long-term care, you're not going to be able to invest that money and get that kind of return for long-term care. You're not going to be able to take the same money and invest that and have 4 or 5 times that amount of money when you need long-term care. Unless you know the next Microsoft or something.
Exactly. So with all those people that, quite frankly, are standing in line in banks throughout the nation, buying that 1-year CD, that's paying 1.05%, they'd be much better off taking that $100,000, putting it into a hybrid product. Am I oversimplifying here? Having a death benefit.
That's a perfect right.
Yeah,
Right.
That's just amazing to me. So
Again, and they can get their money back if something goes wrong. Usually, to get the full money back takes about 4 or 5 years. Depends on the carrier we go with. But again, once you hit that 4 or 5, you can say, "Hey, I put 100,000 in. I'd like my 100,000 back." You'll have 100,000 the next day sent to you. So it's your money and it's in your name. Yeah, I mean, I don't know why you would do that, because you wouldn't have long-term care insurance anymore.
that's right. That was the whole point.
But that was the whole point, right? Yes, you could do it.
The other question that I wanted to ask, and I think I asked it the first week, but I'm going to ask it again. There is that upper middle class person that has more than $100,000 net worth, more than $100,000 equity in the house, but quite frankly, married, children that are getting married, children that are going to college, even if those stages is over. They just don't, and they might have that 401k or that IRA with 6 figures in it, but they're not in a position to write that 6-figure check. Is there, in fact, as our first caller brought up, or our second caller, still traditional products out there? I think you called it on the first show a 10-pay or a 15-pay. I'm not even familiar with those terms. Is the traditional still out there for that person that has real wealth to protect, but not the liquidity in today's world to write a 6-figure check?
Absolutely. And first of all, when I'm talking 5-pay, 10-pay, 15-pay, I'm referring to the hybrid products. All those hybrid products have the option to spread the money out, so you don't have to put it all in a lump sum. But yes, the traditional coverage, almost always everybody pays a annual premium or a monthly premium. Now, there's a good tip for almost anyone who's considering long-term care. If you pay the premium annually, you will almost always save approximately 9% off the overall premium, because when you pay the premium monthly, the insurance companies charge you a service fee to dock your, to take to withdraw your money from your checking account. And so they charge on average about 3/4 point, which adds up to about 9% interest a year. If you pay for it once a year, you don't have to have that fee. You've saved 9% off the cost of your protection, which over time adds up to a lot of money.
A lot of money.
Several thousands of dollars, because you're in effect saving a full month's worth of premium by paying for it once a year.
So you put up $100,000 rather than paying $10,000 a year for 10 years. You're saving 9% on that $100,000, $9,000.
In the case of and no, I was talking about traditional coverage, but in the case of a hybrid, the difference is you're going to get more benefit if you put a lump sum in.
Okay.
Versus because the more time the insurance company has to work with your money, the more benefit they can give you. So if you put a lump sum in, you're going to get a more robust return in your benefits than you will if you paid it in over 10 years or 5 years.
Right, I got it. One of the things that you mentioned, people mention this all the time. I'm going to talk a little bit about this also in the last segment. I spent Thursday and Friday at the Florida State NAIFA show, NAIFA. That's the National Association of Insurance and Financial Advisors. And in my opinion, just the best organization in the country for professionals like
certainly
this.
Probably the most respected one, yes.
Yeah, I met with their president, and he's going to be a guest on our show soon. But they touch on so many things you would think in a 2-day symposium of type A class people like myself, personality, who are insurance salesmen, financial advisors, that you would have heard a lot of pitching. But you heard a tremendous amount of care of their clients, of worry about their clients, success stories of how they protected their clients. People like yourself are truly an unusual group of type A personalities. Because when people think of that insurance salesman or mortgage person, they quickly get lumped into they were an ex-copier salesman, ex-used car salesman. I'm not insulting copier salesman or used car salesman. But the insurance world, and I'm not an insurance person, as you know, don't have a license. Insurance protects people. Insurance allows people to live their lives. Insurance allows me to go to bed at my age knowing that if something happens, my children, who are even adults, are well taken care of. That misnomer that the insurance guy is walking into your house to sell you a product is it's a lifelong thing, I think. It's been around since I'm a kid. But how do you deal with it? Because you truly do protect it. We're talking about something here that is the difference between mom and dad living an incredible life at home, surrounded by loved ones with quality, as opposed to in a home where the kids visit, but they really don't want to be there. And I took way too long with this question. So we have about 20 seconds left. So start your answer, or maybe we shouldn't start your answer. We will come back in about 3 minutes. And I want to talk about that. And I want to talk about the importance of staying at home. Insurance aside, let's cut to a quick break. Hi, my name is Mike Banner, and in addition to being the host of the 62 Who Knew television show, I am also the president of Professional Mortgage Alliance, where our passion is helping seniors entering retirement purchase their dream retirement home without the obligation of a monthly principal and interest payment. Please call me at 727-224-3859 or visit my website at professionalmortgagealliance.com.
My name is Ann Rogers, and I'm a real estate agent and broker in Pinellas County and have been for over 24 years. Ann Rogers Relocation Resources provides a full array of services to help you or your loved one transition gracefully to a new residence or adult living community. Our first consultation is free and with no obligation. Please visit our website or call to talk to me directly.
Hi, my name is Lisa Marie Kennedy, your real estate expert here in the Sarasota, Lakewood Ranch, Bradenton area. I spent years developing myself, studying the industry so I can serve you and communicate with you the best way possible in your real estate transaction. My phone number is 941-807-2054, or please visit my website at lisamariekennedy.com.
Welcome back to the last portion of our show. We caught Mark texting there. Last week they caught me.
Sorry about that.
Last week they caught me doing that. With only about
somebody listening to the show though, so I was answering a question.
Oh, that's good. With about 8 minutes left. Again, I just spent 2 days with about 250 of the most passionate financial advisors, NAFM members. It was just an incredible 2 days. And I've seen you in action. I've seen you, Peter Gelbwax, Bill Comfort, Terry Truesdale. These are people that I look up to. Tell us a little about, in the few minutes that's left, how you approach the way you protect people, because it's a hell of a thing to do for a living.
It is a hell of a thing to do for a living. Thank you for recognizing that. It's very noble. I can share with you that over the years, there have been many times when you make a real difference in people's lives, not just at the time of claim when you see what kind of a difference it makes, when even if they don't have the amount in their policies to cover all the costs, just to be able to take the catastrophic risk off the table is such so much peace of mind to not only the a person getting the claim benefit dollars, but to all their family members and others who those lives impact. Nobody wants that anybody else have to change their life because they find themselves in the need of care. And a long-term care policy allows for them to be there for them emotionally and support them, but at the same time, not have to add that extra wrinkle of what's going to happen if we use up all the money because mom or dad need care. And that's so very true for spouses. One of the statistics we shared last time we spoke, and it's so interesting, is that it's 8 times more likely that you'll end up needing care yourself if you end up being a caregiver to someone else. Because when you're dealing with all the uncertainty and all the stress, that makes a huge difference in your health and your quality of life. You can Google it, there was a episode on 60 Minutes back in April that followed a family where a husband and wife, the wife had Alzheimer's in her late 50s. And you can see we just put 60 Minutes Alzheimer's in on YouTube, and you can see in the beginning, the man was very confident he could handle this. And by year 10, he was ready to put a loaded gun in his mouth because of the stress and strain and how it had changed his life and everybody else's life and their family. And he watched his life savings disappear trying to take care of her at home. And she had pretty much forgotten who he was. But he was still committed to staying the course and making sure she got care. And I think they're up to year 14 now. So it just goes to show you how long that can be. And again, with the average cost being for a nursing facility being well in excess of $100,000 a year now in most places around the country, that's it can add up pretty quick. The other stat that was interesting to your question, and I'll turn it back to you, is again when people find themselves in need of care, having someone that's going to be there to help pay the bills not only takes the stress off to the point that they don't have to worry about how they're going to get their care, but the stress can be so great that a stat I shared this with you last time too, and I know you were amazed by it. 40% of the people that are caregivers will actually predecease the person getting the care.
Yeah, that staggers me.
That staggered me too when I heard it. So, and that's right from the actual claims departments of all these different carriers. So that's not something that's theory or something like that. That's based on the real life experience of what's happened with these claims at the claims through the claims departments at all the major carriers. So
yeah,
again,
that statistic.
I can't emphasize it enough.
That statistic of 40% of the caregivers predeceasing the people they're caring for, and then your first statistic of how many people are going to get ill while caring is
this is something they truly do for each other. Yeah. You do it for each other. One of the questions that I like to ask, and I consider myself a field underwriter. I don't sell long-term care insurance. People, you can't sell it anyway. People need to either decide it's right for them or it's not, and then they have to apply for it, get accepted for it, get issued for it. They have a 30-day free look period once it's issued. It's a process. It's going to take a while. But one of the things that I ask in the interview is, if you weren't here, would you want your spouse, your loved one, to have this kind of protection? And almost always the answer is yes, of course. Well, that's what it's all about.
That's right.
That's what it's all about, is making sure that your loved ones are protected. Go ahead.
I'm not sure if it was you or Harley or Bill Comfort, or, everybody gets lumped together because I come to your long-term care conventions and I walk out pretty much in awe that said long-term care insurance is not a product, it's an event. And it's funny, I heard that from one of you probably close to 10 years ago, and it stuck with me. It's an event.
That's right. It's something that happens to you, and it's not you're not. It's not the product that you're buying. It's the it's the old adage in sales. When you go to buy a drill, are you really buying a drill? Or are you buying a hole?
Right.
You're
That's
buying
amazing.
a hole. And that's what this is. You're buying what the product provides in the form of solutions when the time comes. And the people that come looking almost always have had some sort of personal experience in their own family or at their church or somewhere where something brought this to the forefront of their consciousness. And that's when they act to do something about it.
We have just about 1 minute left. Let me use a few seconds to thank you. You were our first guest, along with Lisa Marie Kennedy, on our inaugural show. You've made this so incredible for us. Thank you for coming back. I'm hoping you're going to come back many times. To me, this topic, long-term care insurance, is one of the main reasons I created this TV show. So we hope to see you very soon again.
My pleasure, Michael. And again, if you need specialists from around the country for different perspectives, I have a pretty good network over at FPS Insurance to help you with that. So we'll be glad to mix it up with you if you'd like to bring different perspectives to bear. And
we are definitely going to do that.
You're doing a great job educating America to these needs. So 62, who knew?
Who knew? Only a few seconds left. Didn't get a chance to update you as I wanted to all our viewers. Many, many changes coming to our website. It has become our goal. It has always been our goal, but we're a little better at it 5 weeks into this, that we are going to make this show, 62 Who Knew, your source of information on every topic that will allow you to have quality of life during retirement. Thank you so much. See you next week. Thank you, Mark.
Thanks, Michael. Bye-bye.